Hello, everyone, and welcome to week 2 of financial accounting. I appreciate that the few who listened to the recording last week were able to give me the keyword so you could get your extra credit points. In week 1, we are going over chapters 3 and 4. That will be the content that you need to read. Last week, we examined the recording of business transactions and the preparation of the trial balance, which constitute the first 3 steps of the accounting cycle. So to build upon this, we will consider the next steps in the accounting cycle, which include the measurement of income or earnings, which is the most important measure of the company's success or failure, the incentive to manage or misstate earnings by manipulating the numbers, which can be very powerful, and because earnings are based on estimates, manipulation can be easy. And we also discuss the ethics behind CPAs and accounting practices, so you need to bring that to the forefront again this week. Ethical behavior is extremely important in measuring business income. Stockholders, investors, creditors, and other interested parties rely on the integrity of a company's financial reports. Organizational leaders, managers, and accountants have a responsibility to act ethically in the reporting process. However, what is often overlooked is that users of financial reports also have a responsibility to recognize and understand the types of judgments and estimates that underlie these reports. So this week's objectives are to define net income and explain the assumptions underlying income measurement and their ethical application. We are going to define accrual accounting and explain how it is accomplished. You will be able to identify the 4 situations that require adjusting entries and illustrate typical adjusting entries in the adjusting trial balance. You will be able to explain and prepare closing entries. You will be able to use accrual-based information to analyze cash flows. And lastly, students should be able to describe the objective of financial reporting and identify the qualitative characteristics, conventions, and ethical considerations of accounting information. There's also some definitions that you should know: conventions of consistency, full disclosure, materiality, conservatism, and cost benefits. You will also need to identify and describe the basic components of classified balance sheet and be able to use financial ratios to evaluate a company's performance. Share my screen here. Okay. Like I mentioned, Chapter 3 and Chapter 4 are going to be your readings in your textbook. There are readings also. There are 3 other resources. One of them is a sample balance sheet. And this is a financial statement that shows a snapshot in time. It's a snapshot in time that shows the accounting equation and whether or not the business assets equal the liabilities plus the owner's equity. Oh, it's down here, sorry. Okay, so this is the sample balance sheet. You can see that you have your title of your balance sheet, and this is kind of a sample of one. Some of them you could also have this in a horizontal format where assets are on one side and the liabilities and owner's equity are over here. But you can see very quickly now, just a snapshot in time. Notice it's for October 31st. Your other statements, such as your income statement and your statement of owner's equity, those are going to be for quarters or monthly. The balance sheet is different because it is a snapshot in time. So you can see very quickly then how a loan officer or somebody at the bank or your CPA can see, okay, their assets equal $61,400. it is imperative that we add in our total liabilities plus your owner's equity to get $61,400 as well. This shows that your accounting equation is still in balance. It also gives you your assets listed, your liabilities listed, and then your owner's equity. Also in week 2, you're going to discuss adjustments, and adjusting entries do not affect cash flow. This is something that we have either already paid, such as prepaid insurance, or it is something that we are going to earn, receive the money, but have not done the actual business. So there is no cash that is changed hands here for these adjusting entries. And they are important because they affect the performance measures, they affect profitability, they affect liquidity. So if you don't do your adjusting entries, you are showing as a snapshot in time an inaccurate form of wealth. You have to take into consideration usage of assets that you may have. If you have a closet within your organization with supplies in it, your print cartridges, your file folders, inventory needs to take place within that supply closet. And you will have an adjusting entry of the usage of those supplies. And if you do not, now that's probably a minimal cost or a minimal entry. But if you can imagine years and years and years of supplies being used, it can show that you have these assets that you could sell for cash, which is liquidity, but you really don't have them on hand. So it's falsifying your wealth. Some examples of your adjusting entries can be for assets or liabilities. If you're using it for assets, that would be your rent. So when I have a lease on a building, I'm going to pay for a quarter, January, February, March. Okay, that is a quarter. And each month, I need to show that usage of the rent. Same thing with insurance. I pay my insurance at the beginning of the month. By the 12th, I need to depreciate that out for that adjustment. You can also record expenses for adjusting entries, and that would be such as wages. You need to pay your employees. You may not pay them until the 15th, but you have an expense that is occurring throughout the 1st to the 15th. So you need to be able to have that money in your adjusting entries. And then lastly, another big chunk of this week is closing entries. And these are balance sheet accounts, and they are considered permanent accounts. So your assets, liabilities, your owner's equity, those are going to be permanent accounts found on your balance sheet. Then on your income statement, you have your revenues and your expenses. Revenues and expenses need to be cleared out each accounting period. Some people do this monthly, some people do it quarterly. Other small businesses, they'll do it annually. So you have to close out some of your accounts. These closing entries are going to be your revenue and your expenses. Now, during this process, you're going to have what's called a temporary account, and that temporary account is called income summary. You are going to close all of these accounts out, as you can see on my screen, into the income summary. What is left in that income summary is going to then be your retained earnings or owner's equity. So at the beginning, what you're doing is you're summarizing all of the period. Okay, you are looking at your revenue for this time period. You're looking at all of your expenses for this time period. Then you're going to find your net income or your net loss by subtracting those. That will be what your retained earnings or owner's equity will be. So then at the end of this transaction period, you will close out income summary to the retained earnings as well. It's kind of confusing, but if you look at the resources in your Explore section and also in your class outline, you will find some notes about this and also a PowerPoint about this and also your textbook. But this explains this in your reading section, the closing entries. This explains and shows you how you debit and credit, how you add them all together, subtract them from your income summary, and then close your income summary into your retained earnings. Okay, so there's a lot of good information here about those closing entries. There are also videos that will instruct you on the balance sheet, and this is a nice one because it brings, it explains the different types of the balance sheet accounts. Then in week 3, this is how to prepare your closing entries. This will show you an actual diagram of how to close out your revenues into income summary, close out your revenues into your income summary, and then find your net income, and close out your income summary into your net earnings. And then you'll also be learning about cash and accrual accounting and how you decipher, how you determine what your business is going to be. You're all or one, okay? You're either a cash business or you're a accrual accounting business. And you have to determine that prior to starting your business and recognizing your expenses and revenues. Okay, chapter 3 has 2 parts of a PowerPoint. This is a great resource in chapter 4 as well about financial reporting. And those reports, there's an additional PowerPoint that was already built into the class, another 27 slides. You can also find this presentation in the resources section, along with that study guide for week 2, which will help you with the vocabulary and other example important information that you need, okay? So there are some great videos there for your viewing pleasure. If you need more information, go out to the Financial Accounting Coach, or I'm sorry, it's not financial, accountingcoach.com. There's a lot of information there. The PowerPoints, there's 4 PowerPoints for you. So that should be very, very helpful as well. Let's go over to your outline, what we need to do this week. The first discussion in week 2 is about the Never Flake Rust Prevention Company. You're going to look at some of the financial risks and see if they are actually reporting accurate information. They have given their customers a warranty, not given, they could purchase a warranty. And what happens here is the manager or the owner of Never Flake, they want to look highly successful by putting all of the income for those warranties in this year's revenues. And then what happens is they've got a lot of liabilities because people are claiming those warranties out and they don't have the money anymore to go towards them. So you need to look at the accuracy, if they're reporting these claims, they're not reporting liabilities for the claims. So look at that, and you're going to write a discussion regarding the Never Flake Rust Prevention Company. Okay. In the second one, you're going to use data found on pages 48 for the company called CVS, which is your local one on every corner drugstores. Whoops, I clicked on the wrong one, sorry. And then in your textbook, page 78, there's another financial information for Southwest Airlines. And what you're going to do is you're going to go through their annual reports and possibly even their letter to the stockholders. You are going to, this is week 1. It's like stockholders. We've already talked about stockholders in the letters. Week 2, discuss 2. There we go. Here we are. Okay, and these are supplements. And again, CVS starts on page 48 and the Southwest Airlines starts on page 78. You need to be able to calculate the company's cash flow yield for the past 2 years. You can find the cash flow yield information in your textbook on page 158. Okay, please round to 1 decimal place when you're giving your information. Again, this may be a little difficult for you to expand on discussion, but check on your peers' answers. Double check in between, look for discrepancies, discuss if you came out with the right one or not the right answers, okay? And if they didn't, try and help your peers as well. Okay, so that is on page 158, cash flow yield. And what this yield does is it's a ratio that helps to evaluate whether or not the company's income is enough to produce, the company's income and producing operations are generating a sufficient amount of cash to keep up with the company's liquidity. And lastly, in your apply, there are 2 different options. You can use the leadership or the healthcare, depending on what you're going into. I'll look at the leadership one. The synopsis here is about a case review over organizational leadership. You need to look, and this is the one that they are talking about warranties again, and whether or not they are using this warranty money accurately, okay? Is the money allocated? Are they going to be able to pay for any of the appliance warranty work when it comes to the first year, several weeks, several months down the line? Okay, and they want them recorded as revenues in 2011, but can you actually do that? Okay, do you agree with the logic? How would you record the cash receipts? What assumptions? Now, what I want you to do with this, though, is make sure that you have an introduction, a conclusion, your references, and it needs to be 1 to 2 pages long. Okay, some of you were just copying and pasting the reflection questions and then answering them. This actually needs to be in paper form, okay? You can certainly add subtopics or subheadings to distinguish between the different reflections that you are doing. But make sure that you have that organized. This is worth 50 points, guys, so you need to have your work organized and submitted in a professional manner. Okay, today's topic for discussion is basic accounting. And I want to have our special word, our secret code, is going to be accounting reports. Okay, that's chapter 3 and chapter 4. They talk about financial reporting and accuracies and conventions. So accounting reports is the code to get your 5 extra credit points for your Zoom room attendance. Okay, once again, thank you so much for logging in. Stop sharing and stop recording. Have a good day, everybody. And if you have any questions, please leave it in the messages and let me know that you've commented there. Thank you and have a good night.